Hey folks, welcome back to another SPY options update. The stock market has been going up in the last few weeks. This is looking at the daily chart. Like I mentioned in a previous video, we're likely to see higher prices going towards the end of this year because all of the exponential moving averages, the short 9, 11, as well as the 50 EMA are all pointing upwards. In terms of my trades this week, not too great. I made a total of $97. There were a couple days of losses and a few days of gains. Meanwhile, as you can see, the SPY from last Friday to this Friday up just a little bit, less than 0.25%. So we'll take a look at the trades from Monday to Friday. Starting with a Monday over here, you can see it started with this big gap downwards and it continued going down through the morning. And I thought it was going to go lower, especially when it came up here and it got rejected off of this previous high point. So I was pretty bearish for most of the day, but as you can see in the last half hour or so, there was a big push up, which I wasn't expecting. So I lost $54 on Monday. On Tuesday, I gained 30. Wednesday, another loss of 19. Thursday was a pretty good day, made $69. And then Friday, which is today, I made $71. So I'll go over the trades for today, Friday, and show how I made $71 with this kind of price action that we've seen today. So today is December the 8th, and the market has already closed. I did not make too many trades today with the SPY. Let's start with the first one here, 459 bull put at around 1017. So that would have been right around here. My spread at 459 and buying the 458 for protection, which means that as long as SPY finished above 459, which is this purple line here, I would make all the premiums, which is only $27, which is not a lot because at that time the price was already above the strike. So I was bullish here because you can see the price has gone above all of the moving averages and all the moving average lines are pointing upwards. Also, when we look at the MACD, the trend is going upwards and the RSI is also above 50 and heading higher. So I could have actually entered the trade a bit earlier because this was where it crossed over, but I was waiting for it to break at least 459 because it could have got rejected at 459, which was a previous resistance over here. So it tried to go above that, but it failed. It got to about 458.90 and it dropped back down. And then over here, it was just kind of hovering around 459, that previous resistance. And eventually it did go over it. So that was a less risky move, even though I made less money this way as well. And then the only other trade I made for today is this 460 short straddle, which is selling the 460 call and put. And I got a pretty good premium from that, $73. And I put in that trade right here at about 245. A short straddle means I don't want the price to move too much. It was nearing the end of the day, which is this red candle here. And each candle is 5 minutes because the premium is 73 cents. I was betting the market would not end the day above 460.73, roughly there, and then it would not end below 459.27, which is like around here. And I was basically watching it for the last hour until the market closed. And if the price goes out of this cone that I drew, plus follow through, then I would get out of that leg and I would keep the other one. So overall, even if I lose money, it won't be a big loss. But if it ends the day within this cone here, then I would make money. And ideally, of course, it would close right at 460, which it didn't quite get there, but it still closed within the range of this upper and lower purple line. So I was able to close my position. Here you can see I sold the call for $44 and made a credit. Then I bought it back for $40. So I made $4 there. And then the put, I made a lot more. Sold it for $29 and I bought it for $7. So that's a $22 difference. Overall, not a big gain. If we look back to the left, there's really no resistance or support back here for like many weeks. So it's unlikely to go a lot higher than it already has. And at the same time, it's also not likely to drop too much because of all this momentum in the last few hours that's been going up. Even if it does fall, it'll break out of this upward channel. It'll double that towards the bottom side and end at around 459.66. That would be a normal bearish case, but in the end, it ended at 460.2. So that was a decent trade. And then, of course, the last trade I put in is expiring on Monday of next week, which is a 461 bear call spread, selling the 461 call and buying the 462 call. And the reason I did this is because if we look at the daily chart, we can see the price action has been going up sort of in this channel, and the price seems to stay within the upper bounds of this channel, at least the candle bodies. except for this one day on December 1st. But every other day, the bodies of the candle seems to be basically within this upward bull channel. So on Monday, which is right here, December 11th, the upper bound of this channel is at about 461. So even if the market goes up that day, it'll most likely end the day below 461. So the 461 call should still expire out of the money. And the reason why I think it's going to be a down day is because we're currently in this uptrend, as you can see with this channel. And today, Friday's close, the upper wick of the green candle is longer than the bottom wick. And when this happens, more likely than not, the next day is going to be a down day. So the market will close a little bit red. Previously, you can see this green candle here. We have a larger top wick and a smaller bottom wick. And the next day, the market ended lower down here. Same thing happened the previous day, this candle right here, where we have a long upper wick and a shorter lower wick. And the next day, the market closed a little bit lower here. Same thing over here with this candle, green candle. That's the important thing, is it has to be a green candle, because if it's a red candle, it's a different probability. But green candle, we have a larger wick on the top side than the bottom side, and the next day the market closed down. So it doesn't always happen that way, but it's just a higher probability. The other reason is because historically on Mondays the market goes down rather than up. So if you had to make a guess, it's more likely for the SPY to drop on a Monday than to be up in price. So because of those two reasons, I'm bearish on the market. But if I'm wrong, that's why I put in that 461. Even if I'm wrong and the market goes up, there's still a good chance that it's going to end below 461 and my bear call spread will expire out of the money and I would make 29 minus $3, so $26 from that. Now, if the market goes up a lot higher, then I would probably close out of my position sometime during Monday, take a loss. So I might sell it for like $80. So I would lose like $50 to $60 on this. But I think the reward here is worth the risk. Now, in terms of what I think the market will do next week, pretty much the same thing as last week. Most likely we are still heading higher. For next week, there's a chance the market could come down and test the 21 EMA, the blue line, because it hasn't touched it in quite a long time back here in November. But it did close above the July high, so now that's going to be support. And unless the green line here, the 9 EMA, goes flat and starts turning downwards, I would continue to be bullish in this market. So that's it for today. Good luck with your investments, and I'll talk to you in the next one.